JBlog, October 11th, 2009. Point of today's blog is to talk about comparative increases. What is going up compared to what? We start out with looking at the New York Stock Exchange Composite, where the market, after having dropped last week a little bit, made another rally up. A very powerful rally. So once again we have a situation here where we have a drop. Here we had a drop and it picked right up. A drop, it picked right up. This one's a little more significant, and yet it picked right up again. There is no weakness allowed. Every pullback is basically a chance for the bulls to charge in again and buy more. And this has basically been going since April. Now the dangerous part about this kind of a setup is obviously that next time one of these turns down, a lot of people will be buying in, but the question is what happens when it just keeps going, and that could develop into quite a panic. So we'll see. But today what I would like to look at is this picture here in respect to anything but the US dollar. So this is the New York Stock Exchange Composite Index in respect to the US dollar. Like if somebody who deals with US dollars would buy it. This one here, now switching over to the S&P 500, this is the S&P 500 if we look at it from an Australian point of view. So if we had bought this in Australian dollars, you can see what before was a new high, or basically a double top in Australian dollar, is actually quite the downturn. Australian dollar has of course been very strong. Next we look at the same picture from a Canadian dollar point of view. So if you live in Canada and you invest in the US stock market, this is the picture that you see right here. So once again, the market did not make a new high or challenge the old high when you're looking at it from a Canadian point of view. European, from a Euro point of view, it did make a new high. The Canadian and the Australian, being resource dollars, basically show the recent strength in resource stocks. The Euro and the US dollar more along the lines of manufacturing, major currencies, so they would not have that resource relationship. The British pound actually went down quite a bit. I talked about that before, and if you're in British pound, buying the US market would have been a good deal. It went up. If you are in gold, let's say your main currency was gold, you had either gold or the market, this would have been bad because this is a third lower high right here with a double bottom. If you are in New Zealand dollars, no, hold on. Yes, the New Zealand dollar. No, the Swiss franc. Sorry, I've got this mislabeled. The Swiss franc. Again, this would have been a reasonably good deal, just like the US dollar. If your currency was oil, then it would have been better to be in oil than it would have been in equities. Silver, even more dramatic, because silver has been going up very strongly. So holding silver made more sense over the last 2 months than holding in the stock exchange. And then we have the Japanese yen, where once again the yen is a bit stronger. So once again, the picture looks very different depending on what your starting currency is. And the combination of all of those is of course the US dollar. So the reality is the stock market did not really go up that much. It is the US dollar that went down. And that leads me into my trade for the week. My trade for the week is actually to go long the US dollar. Now, that seems crazy. It might be crazy. I'm looking at this chart and I'm thinking to myself, cheap. I wouldn't mind owning some. So on Thursday, I actually established an option position, and the option position is in UUP. UUP is a double bear dollar bullish index. My strike price is 23, expiry is March of 2010, and that option is selling for what I consider to be quite cheap right now. So I took a position in that. It could very well be with this bounce on Friday that we're going to see some strength in the US dollar. Now, if we get strength in the US dollar, all of these inverse relationships that we were just talking about, so this was the S&P in US dollar, this is oil, of course, in US dollar. Oil hasn't done much of anything lately. But if we look at oil in the Australian dollar, for example, oil has been going down. If we look at oil in the British pound, it has stayed flat. And if we look at oil in the Canadian dollar, it has actually gone down. And different other currencies, oil has definitely not been as strong as the US dollar, which once again comes down to the fact that this is not so much a commodity rally as it is a dollar collapse. But that, as I said, that could change any time. And that's very important to understand which one is actually going up and which one is actually going down. In this particular case, it is the US dollar that is going down. So if the US dollar changes course, a lot of these markets will be going down, and the US dollar will obviously be going up. So I took out a long position in that, and let's see what happens on that. Looking at the rest of the market, as I said, the New York Stock Exchange did establish a new high. OBV is showing a little bit of weakness here, not too strong. The bounce stochastically came from a low. It wasn't very low, so we'll see where that goes. The VIX shows that there is basically no fear in this market, or very little fear once again in this market. There was some fear last week, but fear has subsided, which once again leads me to believe that if one of these bounces here, this is complacency. The VIX going down is a lot of complacency. Lots of complacency in the market that says, oh, the market will just keep going up. Every pullback is a buying opportunity. So if we have a buying opportunity here that fails, we could see a lot of people rushing out of the market very quickly. It is a dangerous situation, I consider it to be. More dangerous than it was back here. Once again, I continue being short. I continue liking being short. Outside of that, Apple going very strong, straight up amazing. How many iPods does the world really need? I don't know. Agrium is going strong. It's coming into agriculturals are coming into a strong part of the year. So we could see more strength here. I was exercised out of Agrium last month. So I'm not holding any right now. The inverse, triple inverse financial, of course, is going down. All of these inverse funds are going down. Goldman Sachs is going up strongly again, because there's some very smart people working at Goldman Sachs that seem to avoid disaster when others don't. What else do we have? SKF is the same as FAZ. SRS, not as the real estate inverse is not as weak as the financial inverse, so that's interesting to see. Vail, one of my positions, very strong right now, so I do like. I'm very happy that I have a strong position in that right now. Anyways, gotta go. 10 minutes are up, so happy trading. Good luck next week. Hope you make lots of money.